Hi, back today for another episode of the JAG Exchange. I'm James Sindelar, and I brought in George and Charles, who are members of the equity and fixed income team. We thought we'd give it an opportunity to just kind of hear straight from the analyst team on a couple different questions. Starting with George, related to equities. When you think about our investment process, what is it that kind of makes us stand out?
Yeah, I would probably say there are three things. One is the J score model that we have. So it's a proprietary model that incorporates several different factors that have been back tested. And that really allows us to narrow down our equity universe substantially to the point that we think that we're only picking from the pool that's most likely to do well. The second thing I would say is our sell discipline. In terms of sell discipline, we have a very big respect for markets. And one thing, for example, that we don't do is averaging down. So let's say we have a high conviction in a name, we purchased it, but it's underperforming or it's down substantially, despite what an analyst might think or how much conviction he or she might have. We'll never sort of buy more. We would first want to see improvement in the sentiment or something in fundamentals. And so tied to that, if let's say relative strength continues to deteriorate or stock is not doing well, we'll most likely sell that name even if fundamental we continue to like it. And the last part I would say is that given that we're still a smaller team, everyone's more than welcome to, and we all collaborate across different sectors as well. So it's not that George, you do only tech and Charles does something different. We always discuss between each other and bring up new ideas. And when Charles is on a fixed income team, I'm on equity team. But what's also, I think, unique that we actually do collaborate quite a lot, share ideas, share research. So I think that helps us to come up with better decisions for our clients.
That's great. Yeah, there's that generalist mindset while still having, areas of responsibility and focus is, I feel like some of that kind of rhymes a little bit with the fixed income side. And Charles, if you could talk a little bit about, you've got 5,000 issuers to cover potentially. How do you manage that and simplify it and make it look something that should be super complicated look relatively easy?
Yeah, similarly to George's answer, it's I guess firstly, we run a really focused portfolio. We narrow it down to the 40 or 50 bonds that we have the greatest conviction in. So that just by design makes it a lot easier to really focus on what we own, really understand what's going on in the portfolio, and research those issuers, those borrowers at depth. But in the same vein, we've got a small collaborative generalist team. So we're all sitting nearby each other and sharing opinions and thoughts and ideas. And we're all, we all live for the market. So we're very in tune with not only our portfolio, but also what's out there, even though there are, like you said, over 5,000 bonds in the index and almost 1,000 issuers. You could ask any one of us about any one of them, and we might not know them at great depth, but we all have at least some idea or some opinion, some level of instinct that's just built over time. And thankfully, I'm surrounded by a very experienced team. And not to suggest that in any way we choose bonds on gut feeling, but it does help us to eliminate some issues, especially depending on their price or their yield, and really narrow our focus to what we want to spend our time on.
That's great. Yeah, there's a lot of long history and knowledge on the different companies that you're sort of analyzing and trying to make decisions on.
Yeah.
And that's super beneficial. So thank you both today.
Thank you.
And that covers another episode of the JAG Exchange. We'll be back soon.